Hello, everybody. And it's wonderful to be here. Thank you, David, for inviting me, of course. Welcome to Mastering Trends and Corrections with the Wavy Tunnel Pro dashboard. I'm going to share with you my three-step playbook for trading trends and corrections. In today's markets, volatile as they are and uncertain as they are, price action often remains in sync with the underlying market cycles. And mastering these market cycles, mastering the timing, is really crucial, as you will soon see. By using a structured roadmap and straightforward timing tools, traders can navigate the markets with confidence and make better decisions as a result. So that's my goal for you today, is to teach you as much as I can about the market cycles. Here's the disclaimer to read. Thank you. Before we dive in, let me quickly introduce myself. My name is Jody Samuels. I began my career as a professional trader with JP Morgan, trading currencies on both Wall Street and Bay Street, where I managed positions that generated millions for the bank. Over the years, I've expanded into futures, stocks, and options. And for the past 20 plus years, my passion has been teaching traders how to move from emotional, inconsistent trading to consistent rules-based success. I also wrote The Trader's Pendulum, the 10 Habits of Highly Successful Traders. In it, I described 3 pendulums that every trader must manage. The market pendulum, which swings between trends and corrections, the financial pendulum, which governs risk, reward, and capital, and the emotional pendulum, which swings between fear and greed mostly. The pendulum framework, markets, finances, and emotions, constantly in motion, is at the heart of what I teach. And before we wrap up today, I'll also share details about our latest software development, the Wavy Tunnel Pro dashboard, which scans for all of the Wavy Tunnel Pro trades, which I'm going to show you today on a website. Recently, my work has also been recognized in major publications, including USA Today and International Business Times. It's always an honor to be featured, but what matters most to me is showing traders like you how to apply these ideas in a practical way, and most importantly, how to read the charts yourselves. And that's exactly what we're going to do today. And why does this matter? And why does it matter for you? Volatile markets create opportunities, but they also bring risks. Most traders blow up not because of the market, but because of their emotions and not being able to pull the trigger or getting too excited at market tops, not getting out of their positions before the market collapses. And with limited capital, you don't always get a second chance. That's why having a repeatable system is non-negotiable. So what process do I follow to find trades, have my confidence to pull the trigger, and manage my trades with clarity? I use a 3-step process. This is my system. The market map, reading the market map, that's part of the analysis. So before I take any trade, I look at the market map and I make sure I understand what part of the market cycle we're in. And then, of course, there's a strategy. I use the Wavy Tunnel Pro. I'm going to show you all of the 6 trade setups today. And then there's trade management and optimal risk reward, which is probably the most important thing. So let's start with the market map for the Wavy Tunnel Pro. This is the first step in achieving consistency, to have a thorough knowledge of the market, to be able to determine possible future scenarios, and be prepared to take advantage of opportunities that arise. In our system, we use the market map in order to provide market context and increase the likelihood of successful outcomes. On the left, you see the complete market cycle. This is from the Frost and Proctor book. I'm an Elliott wave person. So this is the 8-wave market cycle, and this is what the market map is based on. And this is a very interesting diagram. You can see classical technical analysis chart patterns everywhere in this market map. So at market tops, you see your head and shoulders formations. You can see multiple head and shoulders formations and reverse head and shoulders formations. You see the zigzags, and this in fact is a 5-wave move up followed by a 3-wave zigzag move down. Now the market cycles are really are all patterns that are tied to collective human behavior related to Fibonacci numbers. We don't have time to get into the Fibonacci numbers here, but these numbers are all from the Fibonacci sequence. So this is called the wave principle, developed in 1938. Now, the market map on the right mimics the 8-wave market cycle that I just showed you. And this is what all of our wavy tunnel trades are based on. Let's talk about Warren Buffett, who said, be fearful when others are greedy, be greedy when others are fearful. That is the contrarian view. So when the market is at point T, moving up, and there's no, it seems that the up move is endless and isn't going to end, that's when traders tend to get optimistic and exuberant. They load up, they get greedy, or just simply don't take profits and don't prepare for this move down, which is inevitable. We just don't know when, but we have some clues, and I'll try to shed some light on that for you today. So this move down is the ABC zigzag formation. Down here is when we need to be buying. This is when the market is selling out of fear, they're bailing out of positions, they're panicked, they're discouraged, and we need to change the brain so that up here we're more fearful and down here we're more greedy. So that's the whole essence of what I'm teaching you today. We have the 8-wave market cycle to the upside and also to the downside, uptrends and downtrends. And on the right, this is the wavy tunnel. This is what it looks like, the wavy tunnel pro moving averages. And you can see how it mimics the 8-wave market cycle. I mean, this is just brilliant. And all of our trades are based on this market cycle, like I said. So once we start the correction, we're correcting a long ways down, okay? Now let's get into the strategy itself. How do you trade the market cycle? The second step in my playbook to reaching the path to success is to have a highly effective strategy, which is easy to understand when making a trading decision. After a good analysis, strategy is used to identify the exact entry point, stop loss level, and profit target to know when to trade and when to stay out of the market. Removing the emotions is key. So the strategy is what gives you the trade setups for the different market cycles, like for the trends and the continuations. This is the trade plan, your exact entry point, your stop loss level, and your profit target. So once you've identified the strategy that you're going to use, that's when the trade plan kicks in, because every trade needs to have a beginning and an end and a middle. And the middle of the trade is all about trade management. The beginning of the trade is pulling the trigger, setting your entry point, using risk management, and where you're going to get out as well would be your stop loss level and your profit targets. So that's called the trade plan. The wavy tunnel solution, introducing our roadmap and simple timing tools. Let's imagine for a moment, what if you had a system that explained how to understand and trade the market cycles using the market roadmap and showed you exactly where to enter and exit the market? And then what if you had simple tools that not only helped you trade the roadmap effectively, but scan for trades and follow a trade plan to effectively trade the setups? And finally, what if you had accountability, the structure and support to stay on track and actually do what you say you're going to do? Well, that's what I'd like to show you how to achieve. The wavy tunnel solution, market roadmap mastery using simple timing tools. And master the market cycles, anticipate market direction with confidence, achieve better timing for trades, improve trade entries and profit targets, engage in rules-based trading, enhance consistency through structured trading, and most importantly, once you learn how to master the market cycles, i.e. read the chart and be comfortable with the chart and be comfortable understanding what's going in the market today, whether you're a day trader or a swing trader or a position taker, a stock trader, an options trader, a futures trader, a forex trader, a crypto trader, it doesn't really matter. And it really doesn't matter what time frames you're trading either. Like we said, you could be trading on the 30-second chart, you could be trading on the daily chart. All of these patterns are the same. But the most important point on this page is to develop independent thinking with clear trading goals. Nobody is going to come up with your goals. Your goals are personal. So you have to determine what your own goals are, and you have to develop independent thinking. If you're buying somebody else's service, if you're following somebody else, that's fine, but you need to be able to say, I like this trade or I don't like this trade. And that's where this comes in. And that certainly reduces stress and uncertainty in trading. And really, why is that important? Because then you can't blame the mentor. It's really your decision. Every trade that you take based on somebody else's views is your decision. So, summary, by following the wavy tunnel solution, traders can navigate market challenges with confidence. Now, before we look at the setups themselves, this is the DNA of the Wavy Tunnel Pro. Elliott wave gives us the rhythm of the market, the impulse and the corrective phases you just saw. Fibonacci symmetry allows us to measure timing and price levels, identifying where markets are most likely to turn, whether we're in a correction or an expansion mode. Harmonics patterns enable us to confirm price targets at key Elliott wave and Fibonacci levels. And momentum shows us whether a trend has strength or exhaustion is setting in. Together, these four elements create a structured, rules-based way of reading the markets. And from this DNA, we get the Wavy Tunnel Pro setups. So the rest of the presentation is going to be me explaining the setups to you and showing you examples. And the charts are all from the dashboard, which we've created. So I'm going to show you examples from the dashboard, but they're all based on these Wavy Tunnel Pro setups. And I think I have to slow down because I have a lot of time left, and I was just speaking too quickly, and I don't want to end early. Although we can always ask questions. Yeah. Okay. So make sure you ask your questions. I can see your questions while I'm presenting, and then I can take time to answer them. So these are the 6 core Wavy Tunnel Pro setups. They're simple, they're visual, they're rules-based, they're designed for clarity and repeatability. They're functional. The start of the trend is called the breakout 1 trade. It's the trend kickoff. So you could call it the wave 1, although it's just called the breakout 1. And I'll show you what each trade looks like, of course. Then we have our trend continuation trades. We have the breakout 3, which is like the wave 3 trade, the riding the strong trends. So that's getting into a trend when it's already underway. And you might not have gotten into the trend at the beginning, but you can certainly get in during the middle, and just as long as you don't get in at the end. Or if you do, that's fine too, because as we know, markets can keep going up, but you have to have an out. Breakout 4 is the end of the wave 4, a blast off after the wave 4 for a wave 5, or just for a pullback, or for the wave 5 move. And then we get to the end of the trend, and we call the end of the trend the price to wave trade and the fill the gap trade, which is the extended correction. And then we have our sideways range bound trade we call Royal Noble range plays with structure. Now this is what it looks like on the chart. These are the charts from our dashboard. Here's the 8-wave market cycle underneath. Let me just tell you what the moving averages are. I'm being kind today because usually traders ask me what they are, and many presenters would probably say no, yeah, but I'm going to tell you what they are. The filter is the 12 EMA. That's the green line. The wave is the 34 EMA on the high, low, and close. And then the tunnel is the 144 and 169 EMA. Now you might ask, well, why are you using those, those rates? Why don't you use the 20, the 50, the 100, the 200? Those are the institutional averages, etc. It's true. When I started working for JP Morgan, we used those moving averages. But these are all Fibonacci averages. And once I started studying Elliott wave analysis, which I started studying at the bank because we hired an Elliottian, a technical analyst from the Chicago Board of Trade from the floor, and he sat on our desk. So I was one of, I don't even remember how many traders we were. I'm trying to count them in my mind now. 20 traders, 25, I'm not sure. Maybe 20 at that time when I was first starting out. And we hired this guy who taught us about Elliott wave analysis, and I was very, very interested in it. So since that time, I've been using Elliott wave analysis, and that's why these averages are Fibonacci-based averages, and they're not the standard institutional averages that you might use. So these are the settings for the moving averages. The breakout 1 trade is when the wave crosses above the tunnel. You can't see it on this chart, but that's the initial move up. The wave crosses above the tunnel. The way I defined an uptrend is when the wave is above the tunnel. It's simple. The wave is just above the tunnel. We're in an uptrend. It doesn't mean that we can't be in a correction. This is a correction and the wave is, which had been separating, is now coming close to the tunnel. That's my definition of an uptrend. And that's what the scanner is based on too. So trend continuation trades, the breakout 3 trades, are bounces off the wave. This is when the wave is separating from the tunnel. The wave is, if you look at a clock face, it's between 12 and 2 o'clock. And every time price comes down into the wave, it's buyable. Now, sometimes the trend is very steep and it doesn't come into the wave, it comes to the filter, and that's okay too. We're in an uptrend. This is the part of the cycle where we're in an uptrend. The breakout 4 is after we find a top, and this purple diamond is the market top. That's the biggest swing move, followed by gray, followed by yellow, followed by red, followed by blue. And then we have a steep correction. Steep correction, this is a zigzag, ABC, all the way down to below the tunnel. That's our ideal move, below the tunnel. And at this point, we do not want the wave to come down below the tunnel, because if it does, this is no longer a stopping point. We're going to have a bigger correction. So what we like for this trade, this is called the breakout 4 trade, is to stop here, find some consolidation, and start to move higher. The end of the trend is up here. This is the price to wave, PW, and then we have the correction, the B wave, so AB, and the fill the gap between the wave and the tunnel. So those are our wavy tunnel setups. Any questions so far? If there are any questions, please ask. I'm here to answer them for you. Even though David is out walking his dog, I can still see the chat. So I've taken a picture, a screenshot of the scanner, so you can see what it looks like. I took it this morning, and on this web-based scanner, the dashboard, we call it a daily trading companion, we have 2 sections. The one section is what is standard on this. So you get the symbol, the asset class, the name, price, volume, percent daily change, country, sector, industry, market cap, whether it's optionable or not, earnings date, ex-dividend date, dividend yield, and forward dividend. So these are all the things that you get on it that are non-wavy tunnel. And you can sort. So if you want to see what the biggest percentage move is, you can say from biggest to smallest, and I sorted greater than 3%. This is an end of day scanner. So the results that I'm seeing today are from the close of business yesterday. That's the way it works because there's a lot of computing power that goes into this, and it takes all of the data from the day, and it, I don't know what it does, quite frankly. That's my technology partner. And then at the end of the day, you see the results. But today's data is not is not there. Although you can get live data, I'll show you some examples. You can get a live chart for today. So these are all of the columns that you can get on the scanner. The next are all of the Wavy Tunnel Pro setups. We talked about the PW. So we have the PWD, which is daily, PW weekly, fill the gap daily, fill the gap weekly, breakout 4 daily, breakout 4 weekly, breakout 3 daily, breakout 3 weekly. So these are all of the trades that I discussed with you. And then we have the daily trend and the weekly trend. Now, if I were to ask you how I define my daily trend and weekly trend, I hope you're still listening. I define a trend, a positive trend, when the wave is above the tunnel. So when the wave is above the tunnel, it's green. When the wave is in the tunnel on the weekly, it's yellow. Down here, this is a weekly downtrend and a daily uptrend. So you can see various combinations. All of these stocks have daily uptrends and weekly uptrends aligned. They're both up, meaning the wave is above the tunnel. That doesn't mean that we can't be in a correction, but that's what it means. So let's look at the PW and fill the gap end of trend trades. And how do you know when we're reaching a market top? Well, one of the things that we look for is we look for divergence in the awesome oscillator. And that's when price makes a new high and the awesome oscillator makes a lower high. So we call this point T, the end of the move. And then we have the price to the wave. We have a pullback without making a new high. And then we start to break down, and our target is going to be the tunnel. So this is just the natural progression. Now, sometimes we don't quite make it to the tunnel, and many times we go below the tunnel, and some of the times we actually go way below the tunnel, and the wave crosses down below the tunnel. So there are three scenarios. I'll just repeat them. We don't go quite to the tunnel and the market is still in an uptrend, and then it bounces off and continues to make new highs. Or we come below the tunnel and it still bounces off and continues to make new highs. Or we come much lower and the wave crosses down below the tunnel. So our job, if we're going to take these breakout 4 trades, is to take the trades, to take the trades that we feel are going to bounce. And if they don't bounce and start to trade lower, we get out. The PW for the gap can be for a downtrend. This is where the wave is below the tunnel, so we're in a downtrend. And to the right, we're in an uptrend. We have the PW fill the gap that we just discussed. And on the left, we have the PW fill the gap, which is bullish. Okay. Up here, we don't know if this is going to be the market's top, but this is a stopping point. Most of the time, we do stop here and we retrace. Even if we don't make a new low, we typically retrace. And so that's a very good stopping point, especially if you, I don't know, if you bought somewhere along here, you'd want to get out up here, or at least that's what I do. And then I wait and see. I scanned for the PW fill the gap trade on the dashboard today. I actually scanned for the fill the gap daily. You can see red, blue, and yellow. And what that means, you can see the picture on the right, APP, you have the purple on top, and then you have a red and a red. So APP is the first stock, red with the down arrow. That's your fill the gap down. So this is the start of the pattern. We had the price to wave, and right, price travels into the wave. We have a sideways consolidation. We get a red marker and then an opposite red marker. So we're looking for a move down to the tunnel. That would be the fill the gap trade. If we look at the bottom stock, that's CENX, that's the second stock. That's a blue with a down arrow, or the third stock here, a blue with the down arrow. We have the purple diamond on top, and then we have a blue, blue. So this is a purple, red, red, and this is a purple, blue, blue. Both are saying the same thing, that we could potentially have a deeper correction and go down to the tunnel or somewhere in between the wave and the tunnel. So what this would mean is if I were long these stocks, I would be cautious looking for a a potential move lower. And all of this comes out, these stocks came out on the dashboard scanner when I scanned for fill the gap daily. Now let's talk about the breakout 4 trade. And I'm going to show you current markets too. Don't worry. I'm going to show you all the indices. I'm going to show you gold, and we're just going to learn a little bit first, and then we're going to go to the markets that you probably watch every day. This is the breakout 4 case study. It's trend continuation. After we have the PW, fill the gap trade, we get the gray diamond into the tunnel or below the tunnel. This is called the breakout 4. Okay? PW to wave, fill the gap to tunnel. Breakout 4 trade. And we have other, this is all programmed, so we have other things that we look at for telling us that for the programmers to say, okay, find me all of these setups. On the left, we have a breakout 4 sell. On the right, we have a breakout 4 buy. So on the left, again, we had the bullish PW fill the gap with the gray diamond moving to the tunnel. And we are looking for a pullback. If we don't get the pullback and it starts to continues to move higher, then the wave is going to cross the tunnel, moving higher. On the right, same story. Look what happened with the wave. It didn't go below the tunnel. It actually did a nice sweep of the tunnel and then started to curve back up again. So this was a nice breakout 4 buy. When we first launched the dashboard, we even named these differently. We named the fill the gap the 1, 2, 3 reversal, because that's really what it is. So we've since changed the name. We're constantly making updates to it. But this, I showed this chart on the weekly. We had a beautiful breakout 4 trade that came up on the scanner. It just came up on the scanner, breakout 4 buy ready. It had just come up, and I really loved this setup. I loved the way that the wave separated from the tunnel and really, was in a strong uptrend, and then had a nice deep correction. And I really like this for a buy. And this is mimicking the 8-wave market cycle. We call it finding the end of point C, finding the end of wave C, actually, finding the end of C. So this is an ABC, and this is a corrective ABC. And then today I said, you know what? Let me show the chart. Let me show where it is today. So this is what I printed out this morning. This is where we were when we first launched the dashboard, and I used it like one of the first, few weeks of using the dashboard, and came up with this trade as a good potential breakout 4, lift off for a wave 5, and this is what happened since. So it actually did move higher. This is the way it's supposed to go. And, this is the ideal setup. They don't always make a new high. Sometimes they do trade higher and then continue to trade sideways. It just depends. It depends. Okay, so I thought that was interesting. Here I scanned for the breakout 4 trades, and you can see breakout 4 daily here, breakout 4 daily here. And one thing that I also do is I want to make sure that the trend, the daily trend and the weekly trend, are either up, green, or yellow. Like that's what I use in my filter. And by the way, I set this up in advance, and I instructed it to send me an alert every night. So every night I get the breakout 4 trades coming to my inbox, and I can have a look at the markets that have presented as wave 4 buy opportunities. So this comes to me every single night, and you can set up that dynamic watch list with anything that you want. You can set it up with any of the columns that we have here, whether they be the wavy tunnel setup or whether they be the daily percentage change. You can set it up how you want it, and it can come to it comes to my website. It comes to my email as an alert. I can also write notes. These are little note functions. So I can, if I'm interested in a stock, I can post the chart here and then write notes on it and then call it up to see what I've said. I can even put my trade plan on there. So this is Amazon, the second one down. This breakout 4 daily happened 6 candles ago. I remember when it happened, and I actually took a position based on this scanner down here. And look at, so this made a new price high, and look what happened. This gray diamond was purple, and it moved to gray once we made a new price high. That's what happened. So we had a purple gray. I saw this breakout 4 trade, and I said, this is really, really very nice. I didn't take it down here. I took it somewhere in here, and it was a good trade. I mean, Amazon, a good company, so I felt comfortable taking that trade. And I got it from the dashboard scanner. I want to bring your attention to the weekly. The other thing that I want to make sure before I'm taking any of these breakout 4 trades, I want to make sure that the weekly is also in an uptrend. That's very important. That's why I filtered for daily trend and weekly trend up or yellow. So green or yellow, not red. And as you can see right here where we got the red dot, this is where we got the gray on the daily. So this is the weekly, and this was the daily. But an uptrend. Why? Because the wave is above the tunnel. This was another example. Boyd Gaming Corp. This was also a good one. Look at how beautiful this pattern is on top. This is lifting off. I mean, this is a nice one. Here we had a nice divergence in the awesome oscillator. We had a beautiful 3-wave move. This was a very nice, strong uptrend. And then we had a nice correction. Well, the dashboard gave us, alerted us to this pattern. Now, today I decided to see, I did something different. I decided to scan for all of the downtrends and all of on the weekly and the daily. So I filtered for red on both the daily column and the weekly column. And it came up with 1009 out of 4989 symbols here in the downtrend on both the weekly and the daily. And how do I define that again? When the wave is below the tunnel, we're in a downtrend. Here, the wave is below the tunnel. It's just below the tunnel. It's more like in the tunnel, but on this candle, it's below the tunnel. So that's why it comes up. But so this is the type of, I want to know that. I want to know if we're in a downtrend or not. I don't mind buying it if we're in a downtrend, like buying it down here, but I wouldn't buy it up here. I would wait for the wave to cross back above the tunnel. Okay. So I ran it for the downtrends, and I also ran it for the uptrends because I was just curious how many stocks are in an uptrend versus a downtrend. I just wanted to see if I would see something unusual, and I didn't, and I'm not surprised by the results. On this next slide, we got 1455 stocks or instruments that are in an uptrend out of 4989. So more ups than downs. Now I realize that today is a down day. We've been in a down like last week for the last week, a downtrend pretty well. I'll show you that shortly. But this is talking about where the wave is above the tunnel. So you can see this is Apple. The wave is cleanly above the tunnel on the daily, cleanly above the tunnel on the weekly. These are the strong stocks. Okay. And you can see the list. I mean, there are going to be 1,455 of these here. And ABBV is the next stock that I took. Even though we are in a corrective cycle here. Let's start on the weekly. PW on the weekly, move back into the wave. And on the daily, that's a PW, fill the gap trade. So we're in a correction. We're in the middle of the correction, but the wave is still above the tunnel. So as long as the wave is above the tunnel and we have the deep correction, I'm happy to look for entries to go long. Personally, as soon as the wave starts to come down below the tunnel, I'm no longer interested. So let's look at some of the markets that you're most familiar with. I have the dailies on top and the weeklies on the bottom. This is Apple. We just looked at that. Clearly in an uptrend on a daily, clearly in an uptrend on the weekly. Here's Microsoft, clearly in an uptrend on the daily and an uptrend on the weekly, but we were very stretched up here, and the market has since come back. It's not unusual that that occurs. Every time the market gets stretched, it comes back, and it usually stops in the wave. If we continue below the wave, then we're looking for a move down to the tunnel. And when we move down to the tunnel on the daily, that would mean a move down to the wave on the weekly. Right now, a move down to the filter is the equivalent on the weekly. Now today, everything has sold off. I don't have my, okay. So this is Google. Look at how stretched we are. Look at over here. What happens when we're stretched? We traded sideways until the tunnel could meet up with price. Here we're stretched, okay? Here we're stretched on the weekly, both in an uptrend, but we're stretched. So you need to be cautious at these levels, very cautious for a pullback. I'm not saying you go short, I'm saying for a pullback. Here's Tesla. So you have the wave above the tunnel. The wave has actually been separating on Tesla. Tesla has been making a nice move up on the daily. And look at the weekly. We had a significant correction down. Remember that if you're trading Tesla. Look at where we are now. The wave has separated from the tunnel a bit, and the Tesla is in an uptrend on both the weekly and the daily charts. We looked at Amazon before, same story. This was the breakout 4 pattern that occurred before the blast off for the wave 5. And look at the weekly. This is interesting. On the weekly chart here, when we came down to the tunnel, that was the bottom. These moving averages are really, really good. They hold the price action very, very well. Meta, and then I'm going to look at the indices. Here's Meta. So Meta had a nice shakeout. Here we have the purple on the daily, and then we had a nice correction. This is a complex correction moving down. It's a complex correction and a complex correction on the weekly as well. But the wave is still above the tunnel on both the daily and the weekly. So once this correction ends, we'll have to see where we end up. But we've had a really, really nice deep correction on Meta, unlike some of the other stocks that we just looked at. Okay, let's look at the SPY. This is the SPY. Now, I took this, what time did I take this? I don't know, a couple of hours ago. On the top, we have the daily, but on the bottom, we have the live markets, and it's the hourly chart. So you can see, and there's a gap here because this is where the market opened, okay? And we're not here now, because it's not live right now. This is a screenshot, all right? But on the dashboard, you can put the live markets underneath if you'd like. You can have dual chart view and put the live markets on. So we are in a correction on the SPY. And what does a correction mean? It means price to wave, okay? A price to wave. This is where we're aiming to go, into the wave, okay? That's where we're aiming to go, into the wave. That's the first stop. And this is the Qs, the QQQ. This has been the strongest index, and we're aiming to go into the wave on this one too. We're aiming to go into the wave, okay? And this is the hourly. So we're a little lower now, but this is the hourly chart. So you can see the live markets here. Okay, it's not live. I told you I took a screenshot of the live markets. So these are the Qs. We've been in a continuous uptrend. These are all breakout 3 buys, all of them on the daily. Every time we came into the wave, it was buyable. Easy to say now, but what's happening now? Are we going to stop at the wave and get a blue or a red dot and it will be another buy? Yeah, or are we going to continue lower and have a steeper correction, which will take us into the gap between the wave and the tunnel? I don't know. But I can tell you that this was a very steep move right here. This daily was very, very steep, moving up, steeper than any of the other, looks like steeper than any of the other legs higher. Okay, the Dow, same story. This is the downtrend that we've had in the Dow on the live markets on the hourly chart below. Okay, so clearly, look, if you could draw a channel line around this uptrend, and we broke down. So every time the market pulled back, it was sold, 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 which could take us down into the wave. This is the first target, into the wave. Let's look at the Russell, IWM. Same story. The Russell was very, very choppy. Like you can see, this is the hourly chart. Very, very choppy. We moved up and we've been trading down. So the markets have been, like the Russell has been divergent with the Qs, let's say, because the Russell has been moving lower. The Qs only started to move lower. I can show you that. Okay, these are the Qs. So we traded sideways, but we didn't have a steep move down like we have with the Dow and the Russell, especially the Russell. So with this Russell, we have been in an uptrend still, and we have to see if we break below the wave on any one of these indices, then we're looking at filling the gap, not necessarily going all the way unless unless it's something that's really, really bearish. We could stop here. We could stop here and then turn back up. We don't know. Okay. We don't know. But this wave is kind of important in wavy tunnel land because we have the price to wave, we have a retrace without making a new high, and then we typically have a fill the gap trade once we go below the wave. Let's look at gold. So gold, look at this weekly chart below, weekly chart on gold. Yeah, it's propulsion, okay, propulsion. And now we're correcting. We're correcting. So the first correction on the weekly is going to be to this filter line. And then the next one, if we have a deeper one, it will be into the wave. If we come into the wave on the weekly, that means we are doing the fill the gap on the daily. So this is definitely one to watch. Definitely one to watch, okay? To see if we can actually move down into the tunnel area on gold. I mean, gold has been, moving up. It's been bullish. It still is bullish. We're just in the corrective phase. So let's see where it ends up. Oh, hi. Okay. If there are any questions, I'm not seeing any questions. Feel free to ask. Yeah, I don't see any questions. Okay. This is the euro for those of you that look at the Forex markets, that trade the Forex markets. We're seeing the same correction in the euro. So the euro has been selling off. This was the uptrend, and we've had a nice steep correction into the tunnel for the euro or into the wave on the weekly chart. Okay, so this is usually where we pause below the tunnel. So let's see what happens. Here's Bitcoin. Okay, Bitcoin, look at I have the live data on the hourly chart on the bottom. So Bitcoin has been selling off, as you can see, right? And yeah, I mean, you can see that this is lower than where price closed last night. You can just see that. Okay, that's why I wanted to put up the live data. And same story. So here we've already, Bitcoin is at this screenshot, had already moved down into the gap. Okay. Had already moved down into the gap. So I think below the wave. I think. I'm not sure. Maybe not. Maybe not. Maybe we're at the bottom. Oops. Maybe we're at the bottom of the wave. So I think I've shown you a lot about the dashboard and the setups. Why did we build this dashboard? There's so many symbols out there, not enough clarity for anyway for me. And I didn't like the endless scrolling through charts and missed opportunities from late entries or second guessing and emotional trades caused by lack of structure and inconsistent results despite having a strategy and wasted time trying to find the trade instead of executing it. So we built this dashboard to avoid all of these pain points, to solve all of these problems, okay? And the solution is the Wavy Tunnel Pro dashboard, one dashboard, clean setups, real-time edge. It scans over 4,900 symbols daily, stocks, ETFs, futures, Forex, and crypto. It flags high probability Wavy Tunnel Pro setups, the PW, the fill the gap, the breakout trades, like I showed you. It saves time, it reduces noise, it boosts clarity as a result. And it's for traders who want structure and not guesswork. And this is your invitation to join us. It's you'll be able to have access right away once you join us to the Wavy Tunnel Pro dashboard, which is a full scanner scanning 4,900 symbols. And what my technology partner has told me is that if anybody wants to see symbols that are not already on the dashboard, to send us the list and we'll get them on the dashboard. And if you have any improvements that you want to see on the scanner, we can make them. Okay, we can improve the scanner, the dashboard. You will get real-time alerts. I showed you I get alerted for my breakout 4 trades every night. So you can alert for the PW, the fill the gap, the breakout 3 trades, the breakout 4 trades, the Royal Noble. And we have plenty of videos to explain all of these setups and plenty of videos to show how to use the dashboard itself. I didn't show you I just pointed it out, the integrated tools like note taking. Okay, you can take notes, you can take a screenshot. And the watch lists, you can set up your own watch list. You can import your own watch list. And as long as the stocks are in the database, you can see your watch list. If you import your watch list of, let's say, a couple hundred stocks or instruments, and you don't see some of the stocks, send us the list, we'll add them. You get all these filters. I showed you how we use the filters. We have a Discord community and bi-weekly Q&A training. And the fast action bonus for today is to receive a complimentary one-on-one coaching session with me, and it's limited to the first 10 traders who join. So I love to speak to traders. We do a formal coaching session together where I ask, a lot about your trading, and I do the best to provide insights. We come up with a small action plan on what you can do differently for the next month. So here's an example of what the dashboard found. Microsoft spotted a wave 4 bottom during panic selling and 37% move in 2 months. I mean, now, of course, it's much different. This was 2 months after the bottom. Here's another one, LYV, a 31% move in 2 months. Okay? But what if you missed the bottom and you wanted to catch the moves moving up? Then you would look for the breakout 3 trades. Okay? So here are the breakout 3 trades. That's another trade that we have. And if you're wondering whether this approach is really making waves in the trading world, I'm proud to share that it's been recognized by not just one, but 2 major publications. USA Today featured the Wavy Tunnel Pro dashboard as a consolidated hub for market scanning, strategy training, trade plans, and more. And the International Business Times highlighted my journey and the unique missing link I've developed to help traders move from confusion to confidence. Being featured in both publications reinforces what I've been showing you today. This dashboard isn't just another trading tool. It's a recognized solution that's transforming how traders approach the markets. So the dashboard, use it as your daily trading companion. You can sign up for this dashboard, and David posted the link at wavytunnelpro.com/dashboard. It's more than a tool. It's a complete system with easy to follow video lessons. You'll understand exactly what you're doing and why. You'll receive market roadmap training. Learn to read the market like a pro step by step. You'll have live coaching twice a month. We meet to review current setups and answer your questions. You'll have private community access. Get support, share insights, and grow with others on the same path. So this is the page, wavytunnelpro.com/dashboard. Feel free to scan the code here. It's one dashboard, web-based, clean setups. I showed you all the setups for your real-time edge. And I'm here to answer some questions. If you have any questions that you don't want to ask here, you can always email me, Jody at fxtradersedge.com, Jody at fxtradersedge.com. and I hope you learned something new today. So thank you very much. David, I'm not seeing any questions.